So good afternoon once again. Good morning, good evening, depending on where you are. And welcome to this week's session. And today we're going to start off with design. And today we're looking at the design more from the financial design. We started off design last week, but today we're going on into looking at the chart of accounts, ledger design, and then we're going to be looking at the accounting data flows. So that's the core of what we've got for today. So within the financial design, we have the ledger. There are three main types of ledgers. So we're going to go through each one. The primary ledger, secondary ledger, and the reporting currency. We'll go through that. We'll then go through the chart of accounts in terms of design principles of the chart of accounts. And then I'll show you some examples. And then we go on and look at the accounting flows and the derivation of accounting from a design perspective. Now, this is a very, very interesting part of the implementation. I mean, I've been on a number of implementations before, and part of what I'm about to show you today has been neglected very early on and then is come back to bite them later on. Usually there is something called an accounting workbook that is usually part of a deliverable that is used within this part of the implementation. But I always say that let's get that done very early on, identify the accounting requirements, and start to think about the derivation of accounting. So we'll go through a lot of this within the financial design today. So just a little bit of a throwback to something that we did last week, which was looking at the financial structure. We mentioned that you have a number of segments within your financial structure, and these segments have certain characteristics depending on the values that you have within those segments and the labels that you've put to the segments to identify them. So in planning the segments, you would normally look out for certain attributes within your accounting structure. So we'll go through some of those today, and also looking at what needs to happen within your ledger for you to build what is called your structure, your ledger structure. So we're going to be looking at some of this. Remember that you have your balancing segment value, your account segment. So your BSV, which is your balancing segment, is usually has the details of your legal entities. If you have an analysis segment, which is mainly for your lines of business, then you may also have a segment for your line of business, or maybe any other segments that you want to use for your analysis purposes. So again, I'm going to go into a bit of details in this a bit much later, but key things to notice that you have segments. Segments have labels which determine what they're used for from an accounting perspective, and then you can build this based upon certain rules. You've also got your ledger, which will have a calendar, a currency, an accounting method, and then you have your chart of account structure, which has your segments. Segments will have values. You can also have security built on them, and for each of these. Now, so that's just for us to have a quick kind of base for the accounting segments that we mentioned last week. Now, so let's move swiftly into the ledgers. Now, with the ledgers, as I mentioned earlier on, you've got three types of ledgers in Fusion. And ledgers, for those who don't have an accounting background, ledgers are record-keeping structures that are used to record transactions and track financial results. Now, within our accounting configuration, you can have one or more ledgers, which can be grouped under maybe a specific ledger, specific business, maybe some transaction processing requirements, and the key components of a ledger are your chart of accounts, your currency, your calendar, and your accounting method. So, and you can also have country as well as one of the, well, it's not part of the structure, but it's part of what determines whether you need another ledger or not. So 3 types of ledgers. The first one is a primary ledger. So when you create your transactions from your sub-ledgers, you then need to send those transactions to GL. I'm using that word send loosely, but it's more or less, we run a program that allows us to create the transactions, the debits and credits in general ledger, and it goes via a layer called the sub-ledger area. Now that sub-ledger area is, we'll create sub-ledger journals, and then this will then in turn create your general ledger journals. Now, once the GL journals are created, it then creates the balances as well, and it updates the balances, and that's used mainly for reporting. So within your primary ledger, you would have a structure, but then which pulls data in from your sub-ledgers. Now, when you're reporting, you can determine whether at what level do you want the transactions to be. Your primary ledger is required, and when you pull the data in, you can say that you want the data to come in whether at summary mode, whether at detail mode, and so on. But I'll come into some of those details later. But the key thing is that you have one primary ledger. So your primary ledger that you have should be your main record keeping ledger, and is required. And every accounting configuration is uniquely identified by the primary ledger. Primary ledger is also closely associated with the sub-ledger transaction and provides a context for the accounting for those transactions. Now, depending on the structure of the organization, you could have a requirement to report at in another currency. So for an example here that I've got is the UK primary ledger, but then you could decide that you want to transfer the data from your sub-ledgers to your primary ledger, maybe at a much detailed level. So your sub-ledger conversion level could be at the sub-ledger level, which is the detailed transactions coming through. You could decide that you want it to be at the journal posting process. So your conversion level maybe of your transactions is at the journal posting levels. And again, this could be for your detailed transaction, or maybe just summarized at journal levels. Or you could have it at the, if you have multi-currencies, at the balances level. So you've got 3 modes of conversion when you're bringing the data in from an external, so not external, from your sub-ledgers, and when you want to bring them in and report in another currency. And that gives us something called a reporting currency. So with the reporting currency, the main difference between your primary ledger and your reporting currency is that you have the same calendar, same chart of accounts, but the currency is different. So reporting currency is optional, is just an additional currency representation of a primary or even a secondary ledger, which I'll talk about in a few seconds. And it can also differ from a source ledger, mainly by its currency. So, and then you have the third type of ledger, which is a secondary ledger. Now, so let me go back a step. Your reporting currency, mainly for reporting in another currency. So you may have a requirement to report at another currency level. Now, it's also possible for you to have another type of ledger, which is a secondary ledger, which is used mainly for things like IFRS reporting. So again, it's another reporting standard. You still have the same same currency, so not same currency, same calendar, same chart of account structure, but the currency is different. You can also even have another corporate chart of accounts. You could have another calendar as well. So you could have those differences, or it could even be the same. But basically, what you're doing here is that you're representing another set of data based upon your primary ledger for the purpose of tracking alternative accounting. And it can differ from its primary ledger by chart of accounts, by accounting calendar, by currency, and even the accounting method. So it's mainly used for your IFRS and type of reporting. So those are the three kinds of ledgers. You would most probably find that you would have a primary ledger and a secondary ledger, mainly because that's if you have a multinational company implementing Oracle, then you may have reporting as well if they want to do some reporting in another currency. But again, there are other tools that some companies use. Some of them are the EPM tools for this kind of reporting as well. But again, it depends on the company. It depends on the number of transactions, depends on how complex their month-end and year-end or their reporting requirements are. So now, the other thing I also want to mention is that your ledgers can be put into something called a ledger set. And this will enable you to close your books or manage your books in a better way. So what you do is that you put all your ledgers into a group. And if you want to run some reports and processes for multiple ledgers simultaneously, then you can do that using your ledger set. You can use it also to support adjustments and allocations, and most companies will use it for opening and closing of periods as well. So again, it's just for maintenance purposes. So I'm going to go into the chart of accounts, best design principles, best practice and design principles. There are 5 main elements, and I'm going to share a document with you that Oracle has put together regarding best practice. And I feel that it's something that you can have a look at, read, and also make reference to. But I'm just going to summarize a lot of the main components of this today. 5 main elements. One is one type of information in each segment of your chart of accounts. 2 is the information in the segments. Let it be limited to the financial data within general ledger. So if you want to report, it's best to report out of the subledgers. So use the subledgers as much as possible. So basically, the information in the chart of account is not repeated in other modules. And then expansion, think about expansion, room for expansion. Again, I'm going to go into this in a bit more details in a few minutes. And also think about using natural ranges and using roll-up groups, accounts ranges that fall within natural groups as well. Again, I'm going to go into those in a bit more detail. And also thin GL. Now, thin GL is using few segments as possible. You don't want to have, even though you can have up to 25 segments, you're not going to use all the 25 segments. Between 5 to 9 segments is considered good practice from a design perspective. So I'm going to go into the first one, which is only one type of information in each segment, and information should not overlap. What does this do? It reduces maintenance, keeping information accurate in 2 places. It's going to be an issue. And also, if you have information in more than one place, then again, there's risk of introducing errors. So example we've got here is that if the cost center has the same type of information in the business unit definition, there's no need to have both. Now, I've been on sites before where I've seen business units inside the chart of accounts, and And there are some modules that don't even use business units. So again, that's not a reason why you wouldn't really want to put that kind of information in your chart of account segment. Then you have second one here in your design principle is that information in chart of account is not repeated. So again, you keep information in those modules within those modules. And you wouldn't have something like a project segment, for example, if you've got projects implemented, or maybe customer segments if you've got receivables implemented. So these are just examples. And again, also think about expansion. So when you're preparing your account structure, always leave room for expansion. This is just an example of a structure. 10,000 represents UK, 11. So that's anything starting with a 1, and 1 is England, 1, and then each of the towns, 10, 20, 30, and so on. So again, in case you want to include an additional value, then you have space in between. And then you can see the increments of 10 there. So there is expansion in between, maybe expansion at the end, and so on. So that's basically what you would start to think about. Then the summary accounts roll up. So again, you're thinking about how ranges roll up to one another. So for example, you can have your employment cost within a specific range, expenses, so again, you're thinking about the values, thinking about how they're going to roll up into a parent value as well. And then you have adoption of thin GL. Basically, what we're saying here is that you want the number of segments to be as small as possible. Now, in this example, you've got project, customer, vendor, and it's not wise to put this type of data inside your segments. That data should be in your subledgers. You wouldn't put them in here. So that is what is called a thick GL, and the thin one is looking at as small little segments as possible. So just to give you an example, some of this in terms of the structure, let me just show you. Going to go into develop and config workbook. Let's go into financial management. So now you've got your chart of accounts hierarchy. So this is an example of building the hierarchies. So description for your companies, your accounts, so you can see all departments, strategy and management, finance and administration. So you're building your structure based upon roll-up groups. You're thinking about expansion. What about if you have more? You've got more room to put 114 or 115 and so on, and even slot stumps in between. So those are the kind of things that we're talking about. And then you're also looking at your, let's look at chart of accounts. So you go segment 1, 2. Again, it's always good to even have a spare segment because of expansion as well. It's good to have one a spare segment. Line of business is mainly used for analysis. Now, if you don't need it, you don't need to have it. But again, that's just an example. Product could be also for analysis. If you don't need it, you don't need to have it. Again, these are just examples. Structure instances. Again, I'm going to come in to look at this in a minute. Yeah, this is the one. So this is your natural account. So when you're looking at the structure of your natural account, you're going to be spending time looking at what are the detailed accounts that they have in their current structure and how does this roll up to easy groupings for reporting purposes. So again, this is just an example. Companies would have maybe ranges that are a lot bigger than this. Some may not even have as many as this, but this is just an example. And I will show you how to actually start to think about designing these structures as well. Now, what are the challenges that you would have when you're doing this? So let's have a look at some of this in your when you go out there to implement. Challenges and validation points. Now, there are certain things that you need to think about when you're going into some of these workshops. Design finance, I call it the financial design workshop. One is whether it's a thick or a thin GL. Now, thin GL is becoming increasingly accepted as common practice, and this is mainly to ensure that the complexity is removed from GL and the subledger is used as intended. And for example, there's no need to have data which exists in other subledgers inside your GL. So that's one thing you need to start to think about. Are they using a thin or thick GL? I would always say question each and every segment as to why they need it. Then legal entity as a balancing segment value. It's common practice to do that. So that's, again, a very quick one to note that, okay, your LEs in your BSV, very common one. Business unit balance sheet requirement. You may go to a site and they may say that we need our BU to be balancing segment. Now, you may decide that that would be, if they're going to go for that and they've signed it up, you may actually use a secondary balancing segment value as well. So you can have more than one BSV. So also think about that. And then use of an intercompany segment. Now, normally that would be required if they have intercompany, if they have other companies. So always think about the intercompany segment as well. And then the chart of account definition hierarchies. So the hierarchies are defined within the cloud, and you can have an unlimited number of levels. And I would say consider simplifying where possible due to ongoing maintenance. People have asked me that how many levels is appropriate. Probably say 5, 6 levels. Yeah, I've seen deeper levels, but it depends on the reporting requirements. COA segments, again, there are additional data that can be configured. So like a supporting reference, references can be configured to enable capture of additional attributes. And this can be used again within your reporting, and they can be populated via your subledger accounting, but they cannot be populated when creating your GL. So think about that. So instead of having data in your GL, you may decide that you want to keep the data in your SLA supporting reference and report from there. Again, when we get to SLA, I'll speak a bit more about that, which is subledger accounting. Flex fields, so consider also using flex fields. We're going to talk about flex fields, I think it's next week, Monday, in a bit more detail. I mean, they're basically fields which can capture additional data. And so think about using flex field to capture additional data. And other things that you may talk about during this type of workshops is the overheads and cost allocations approach. Again, there's an allocations engine provided with ERP Cloud, which allows flexible means of reallocating overhead costs. And you can perform cost allocations without the need to create specific GL accounts or BU entities. So again, think about that. So basically what we're saying there is that if there's functionality somewhere within ERP that can do it, then there's no need to extend the complexity into another module. And then security and access rights for flexibility. Again, think about the segment value security. Again, there's a maintenance overhead there, but depending on the requirement, is another functionality that you can use. And then restriction on subledger capability. At the moment, there are no restrictions. You can use it as you want. So really, there shouldn't be any other complexity. You can run your reports if you have the data in there, and they might kick back and say that, oh, we want that information to come through to GL, but then it's the maintenance, it's the additional, I've always maintained is that you go to the source of the data to report, if depending on what you want to do. So key implementation considerations, you need to think about what are the current and future plans within the company. Are they thinking of implementing other modules, and how would that impact your chart of accounts? And then you need to look at the chart of accounts design and the impact on external systems and interfaces. So always think about the other modules that are around GL: manufacturing, payroll, external system, and also the finance subledgers. Again, those are the key things. Now, one other thing to look out for or to think about are your reporting needs. Very, very crucial. Very, very crucial. Now, you need to think about the current reporting needs and the future reporting needs. Look at the frequency, look at whether it's external, whether it's internal, whether it's monthly, quarterly, year end, and you can use a similar table like this to kind of identify those type of reports and information required in those reports, because it's the information that is required that will determine the data that you need in your segment and how you want to structure it. So for example, if you're building P&L, profit and loss, and your balance sheet, then you need to structure your account segment so that you'll be able to pull that information through, your assets, liabilities, owner's equity, your income, expenditure, in such a way that you can pull those data through very, very quickly. And also you need to look at your local reporting, any localizations, and so on. So those are the kind of things that you need to look out for. So before you start this workshop with the business, always think about one is the reporting needs. As we just mentioned, you also need to confirm any GAAP, generally accepted accounting principles approach. Are there any IFRSs that they need to comply with? Are there any local gaps that they need to confirm, adhere to? So for example, in some countries, like France, for example, they have the Generali, compatible Generali, General. Okay, I think the other one is Libera Generali, which is in Italy. So think about local reporting requirements and look at what is required for local GAAP. And also, you need to do a workshop of the proposed chart of accounts, take the business through, let them know the as is, what it means in terms of the to be, and then show them the local deviations, if there's any, and then possibility of enhancing if they need to. And also any governance, controls, requirements. Again, these are the things that you need to look out for when you are planning these workshops. So what I'm going to do now is I'm going to move swiftly into the financial accounting flows. And And for the next 15 minutes or so, I'm just going to take you through some of the core flows and the documentation that I'm going to give to you that will enable you to put together your accounting workbook. And I mean, what I'm going to show you, I've used it in many projects. It's something that I've put together over the years. I've adapted it from the EBs even into the Fusion. And then I will take you through the slides. I will take you through how to use it. I will take you through also the accounting flows themselves. Not in its entirety, but just to show you how to navigate through it. So very quickly, one of the key things to identify is that there are multiple interrelated modules. Accounting is generated from different parts within the application, and we just need to bear that in mind. So for example, in procurement, the accounts are generated when you raise a requisition, for example, but they are not the account generator generates the accounting. But when you now create a PO, it uses those generated accounting on the PO. And then it uses some of that generated accounting when it gets into receipting, and then also when you are matching to the invoice. So there are processes that go on, and the accounting kind of flows all the way through the process. So that's basically what we want to try to understand. And the decisions that are made in one area can have an impact in other areas because data flows from one area to another. So you have your HCM structure, and you want to see how does that relate to finance. For example, your cost centers are entered in HCM. I'm talking about the link to departments, and that's used for can also be used for account derivation. Projects and order management can be used with receivables in terms of the generation of accounting. And then you have things like your cross-validation rules, from GL that affects everything. So you need to think about how does all of this impact. So when you're having your accounting workshop, when you're doing your design, you're thinking about how does what I'm doing now affect other modules. So that's basically what we're looking at. So I'm going to go into the core flows. So okay, this is just some information. As part of the configuration discussion, we'll ask you to make decisions on accounting based on the accounting policy. So one of the key things is that you need to identify if there's any deviation from any standards accounting policies or accounting requirements. There are basic accounting that will be based upon maybe international accounting standards, maybe some local standards and so on. But if there's any deviations based upon maybe the type of business, like insurance accounting is different to standard accounting as an example. So those are the things that you need to start to think about and try to get that information. How do they generate revenue, for example? What is the accounting behind that? So what I'm going to show you, these are just standard flows. These are just standard. Now, before I go in, let me just go into the, let's go into, so there is a spreadsheet, which is the accounting principles and flow spreadsheets. Now, let's just see, let me just download that and give you an example. Right. So this is the spreadsheet. And in this spreadsheet, you have a list of scenarios. let me just mention this. You have a list of scenarios. You have a list of different areas, and you have how accounting is derived. So in procurement, procure to pay, so receipt accounting, payables accounting. So that's one part of it, right? And in each of the different tabs, you have the events that derive accounting. So let me look at payables as an example. So when I create an invoice, there are certain elements that derives accounting from my invoice. So for my debit, is that going to be an accrual? Well, it depends on your accounting principle. It depends on when the invoice, whether you accrue at receipt or you accrue at period end. So let's take an example of where you accrue at period end. You debit the expense, debit any tax recoverable, and you credit your liability. So we're saying that, how is the accounting derived? Somebody has to enter it manually. How is tax derived? It has to be derived based upon tax setup. How is the liability derived? It's derived based upon payables option in the supplier side or supplier side. Payables option or supplier side. So that's an example of how this document works. So for each point, each segment, how that data is derived is specified in the spreadsheet. So for example, for fixed assets, even though we're not implementing fixed assets, I've got fixed assets in here for you. If you're interested, if you add an asset, it tells you your debit cost, credit, your cost clearing, as an example. So you've got all, and for each of the segments, where that's going to be derived from. So that's basically this spreadsheet. Now, you're probably going to say, but how do I know this stuff? How do I know how all this works? Now, what I've done is that spreadsheet I showed you is just this accounting principles and flow spreadsheet. Now, this accounting flows PDF is really the core of what you need. Now, in here, I have all the different areas. So if you're in a workshop and you are presenting, oops, let me just go back. And you're taking them through, let's say, payables. So you go to payables and you tell them that now, when an invoice is entered, this is the accounting that would flow from an invoice. So depending on whether they're going to accrue at period end or accrue at receipt. And it tells you when the debit will happen, how the debit is derived, what the credit will be. So when you're going through, you're asking them that, okay, we're gonna depend on what they're saying. They could say, okay, we accrue at receipt, or we accrue at period end. So if they say we accrue at period end, for example, you said, okay, now that means that when the invoice comes in, if it's a PO, you match to PO, debit the charge account, and this charge account, we will get this from the PO line. And then debit recoverable tax, any non-recoverable tax will go to the same charge account as that, and we credit trade. So you start to ask them, what's your trade creditors account? What's your charge account for this? What's your recoverable tax? They should have all of these accounts, but then what you then do is then populate this into a spreadsheet, which I am going to give you at some point. Let me just see, is this systems accounts here. So your liability account, you make a note of what the account will be. the description, and account type. So what I've got in this tab here is all the possible accounts that you need for all the modules that generate accounting. You can use this as your starting point and start to expand on this. And I've got the type of account, especially when you get to areas like receivables. You know, there's a lot of different types of accounts required for receivables, whether it's an asset, whether it's a liability. Some of this will be required during your setup, but again, in your accounting workshop, you'll have to go through each of these. Now, I've made this a lot easier for you because in this PDF that you have, go back to the Excel. Where is my PDF gone? Oh, okay, it's on the browser. So here you have the link to all of them. So I go click on home. So procurement, payments, for example, I've got the accounting, the debits and credit for accounting, for payments. If I go to receivables, fixed assets, receivable, and then I've also got here how they all link together: intercompany to receivables, supply chain to receivables. This is from order management to receivables. Payables, external systems can come in. You've got payables linking with projects, expenses linking to payables, procurement linking to, again, to payables, to projects, to supply chain. So you can see how the accounting links between all of them. So if I select receivables, you know, if it's a invoice, credit, debit memo, again, I've got the accounting. And if I go to my spreadsheet, I'll be able to see how this will be derived, each of these in my spreadsheet. So in my this one, yeah. Receivables, again, I've got all this, you know, if it's an invoice, how this will come from my transaction type, and for each of the segments, intercompany from customer side. So these are just examples, but is very detailed, and it goes through every type of scenario. Right. So before I start to ask for questions, so the assignment for today is to review these flows, these files that I've given you. Just get yourself familiar with it. Tomorrow we're going to start to build. We're going to start to config our GL, AP, and AR from tomorrow. A lot of the information will be information that you collected during these sessions with the business to get the data required to start to load your rapid implementation spreadsheet. But what I always say is that the work to do that should be done beforehand. There's a lot of time that will be spent confirming some of these accounts before you even start to load anything. Yeah. Okay, I'm going to review the flows, make a note of the data flows of the accounting, compare them with similar flow on the environment during the startup course of the week. So again, you've done this, you've gone through, you've created expenses, payables, receivables, and then just compare what you've got here with what you had when you did the starter course last week. Now, questions. So there are a few questions in the chat. Okay, there's just one. So what is an example of a revenue management system? So that's a billing system. There are, well, revenue management system. So let me give you a practical example. The guy who, well, how, It's a very, very open question. So I'm going to give you a practical example. You may have in the council, for example, the receivables is actually a revenue management system, but you may have an additional system that could be used to manage the money that people pay for fines. So that could be an example of a revenue management system, and that fines maybe the traffic fine or whatever. So all that could be going into another system, and the data sucked into Oracle for management later. But again, you could have a different billing system for that. Your phones, for example, all the calls you're making, you could have a system that is used to manage the what you'll be charged for each call and so on. So again, that's just an example. Yeah, sales systems. Yeah, it could be your online sales system as well. You know, online website. That could be a revenue management system or used as a revenue management system. It's income. Yeah. Okay. What is, I'm not sure I understand this question. PFC to confirm. I'm not sure what that means.
Yeah, I was just asking, what does PFC stand for? That's all.
PFC in what context?
It was on the slide. You know, on the workflow thing, on one column, it's saying PFC to confirm. So yeah. Okay, that's all. Yeah.
Okay. Maybe projects financial. I think I remember. Maybe I've had that. Is it in one of? Is it in the?
It was in the Excel. One of the Excel spreadsheets. Yeah. In the columns. Yeah. Yeah, that's right. That one. Yeah.
Let me come back. I can't remember what that PFC is again.
Okay. No problem.
Yeah.
No problem. Okay.
Company. I can't remember. PFC to confirm. So, yeah. So I can't. Sorry. Yeah. Okay. Any other questions? I can see Dominic's got his mic open. Financial controller. Yeah, could be. Yeah. Could be project financial.
Project financial. Okay.
Yeah. So that could be somebody to confirm. Yeah, that's the business, right? Actually, I should just make that business to confirm. So they will actually tell you what that should be. Yeah. Okay, thank you. Any other questions? Now I'm going to ask a question then. Can Oracle also be used as the billing system? Yes. Oracle has actually got a revenue management system, revenue billing components. Yeah, you can actually use it in there as well. Revenue management is another module within receivables. Yeah. I was going to ask a question. Now, for those who are accountants and for those who've implemented either accountants or those who've implemented financials before, have you been on projects where I just want an opinion on where the financial workshop wasn't done or maybe was done, and whether what your experience is of conducting a financials workshop, financial accounting workshop. Anyone? Everyone's silent.
Hello.
Yes. Yeah. Hi. Yes.
Hi. Yeah. Me. The only aspect I've done in relation to the implementation project is the user acceptance testing.
Oh, the UAT.
UAT aspect of the implementation project. Yeah. That's the main thing. But I haven't done any financial workshop.
Okay. So at the point of UAT, have you observed, or have you got to a point where you discovered that the account generation was incorrect?
Yes, there were scenarios when I was doing my testing, and there was some transaction technical problems whereby the interface didn't work correctly, and sometimes the consolidation of the balance sheets didn't reconcile correctly.
Yeah.
So basically at the time we had this template where we had to log all the errors.
Yeah.
And they will be reviewed by the technical consultant.
Yeah.
So
Yeah.
that was my experience.
Okay. So to reduce, so to reduce the accounting errors, because it's easy for one to say that, okay, if you press ABC, something happens on the system and so on. But in terms of the generation of accounting, is an area where a lot of implementations don't take that serious.
Okay.
Some do, but then when they start to discover it, it's normally too late. It's usually during the UAT, or sometimes even after go live, is when you now start to run your reports, and then you now discover that accounts have gone to where they shouldn't go to, and then you start to create journals and start to firefight. So the main purpose of this accounting workshop very early on is to confirm the accounting, and also to reduce the risk of having errors much later on during the process. Yeah.
Okay.
Yeah. I mean, I've been on projects before where this wasn't done at all.
Oh, wow.
Yeah, it wasn't done at all. And they went live, and then we had to pick up the pieces afterwards.
Well, based on my experience on the projects I was involved in, as you know, it was the old EBS suite. It was doing a system upgrade from version 11.9 to version R12.
Okay. Yeah.
And at the time, they would give us a list of test criteria, what we need to do, maybe to run a report in the AP ledger, the AR ledger, and then look at the post and see whether we have in the subledger poses correctly into the general ledger module.
Yeah.
It could be something to run a revaluation in the euro currency and also the USD currency in the different set of books. So there's quite a number of criteria of tests we had to do. But all this exercise was done. We had to do all this exercise. We had to do it in the test environment.
The test environment, yeah.
Yes, it was all done in test environment.
Yeah.
We absolutely were not allowed to do anything in the live environment until we have done it through the test environment, and we have done all our validation checks.
Yeah.
So once all the validation checks has been done, and we know that it's working correctly in the test and database environment, that's when we then proceed to
put it to live. Yeah.
To go live. Yeah.
Yeah. Great. Thank you very much. Thanks, Raymond.
Yeah. Thank you.
Yeah. So I've got it. Okay. Oh no, this is just some information. Usually the sequence is first enterprise structure. Yes. Second, you build your chart of account structure, and then your ledgers, and then your cross-validation rules, and then the reports. Yes. Thank you very much, Samson. Thank you so much. Yeah. So that's correct. Yeah. So another question, does Oracle Fusion Cloud interface with Oracle e-commerce? Oracle e-commerce. Yeah, they should interface, but I haven't worked on any of the interface on that aspect. Yeah, but they should do. Yeah. Any other question? I can see a few mics open.
Yeah. I just want to ask a question. Like, I know you'll be talking about in terms of the various roles that one can apply for at the end of the course. But when like you go for like a tester, is that one of the more exciting roles where you go there as a hacker trying to break the system and find out what it was?
I'm not sure about the word exciting being used.
Don't get heart attack and all that, yeah.
Because yeah, it could be. It depends on your timelines and what you're really testing. But yeah, testing is a role that you could. I mean, I know that you could even go for. I know people who have been testing for years and they're test experts. But that's something that you need to think about as you're going through the course. Where do you feel more comfortable in, and then just become an expert in that area. Yeah.
Okay.
Yeah.
Okay, thanks.
So there's a question here. When you accrue at month end, is that when the accounting is created? Yes. So that's when the accounting is created. The two ways, so I believe that this is in the context of maybe receipting, because you can either receipt at month end, accrue at month end or accrue at receipt. So if it's accrue at receipt, the debit to the your expense will happen at the point of receipting. If you accrue at month end, the debit to your expense will happen at the end of the month. Okay.
I've got a last question, please.
Yeah.
If I may. If during the workshop, you ask them about other modules that they can add on to the Oracle, the Fusion, and then you identify, say, 5, but there might be 3 or 4 others that it can. How do you make that provision? Do you just kind of leave some segments available and stuff like that, so that in the future?
Well, it's always good to know the total footprint of the implementation. And in some cases, they would say that, okay, we're going to do projects much later. And then for that reason, you'd have to think about, okay, how is that going to affect your design of a chart of account? How's it going to affect the modules that are coming in later? That's basically where I'm going with that. So every business will be different, and they will give you the footprint. I mean, they would normally have 5 to 10 years plan to do that. Yeah.
But I guess whatever they say, you have to make them sign for it.
So yeah, of course. Yes.
Okay.
Yeah.
All right.
I mean, these are big implementations. There's a lot of budgets and costs involved. So most of these companies wouldn't implement everything at the same time. Some do, but it would probably take a bit more time. But some do it in piecemeals and so on. Yeah. I've got a question from your experience. How many functional consultants are usually involved in a global Oracle Cloud implementation? Wow. I've been on projects where you've got 300 plus, and I've been on projects where you've got a handful of people, maybe 20. So it really depends on the size, the company, there's a lot of different things that determine how many people will be on the project, because you have functional consultants. Again, it would depend on the number of modules that they're implementing. So usually one lead per area, and again, it could be one lead per area per country. It could be one lead per region. You could have multiple people working with that one lead, and so on. So again, it really depends on the size, the scale, and so on. Yeah. Okay. The budget we decide, yes, and the modules from which is, yeah. Okay.
Hi, Yemi.
Hi.
Yeah, I have another question for you.
Okay.
In terms of the way you've got the structure of the chart of the account, the primary ledger and the secondary ledger.
Yeah.
And you also have
is it reporting?
Reporting, yeah.
Yeah, the report, yeah,
reporting currency.
The reporting currency and the transaction currency.
Mm-hmm.
This design structure that you have here, is this a blanket standard template to do the implementation regardless of the size of the company?
Again, it depends on the company. Every company will have a primary ledger. Most companies will have a secondary ledger if they're reporting IFRS. Yeah. And they would also have a reporting currency if they are to report in another currency, maybe to their head office. Or so it could be that their headquarters is in maybe the US, and they want to report maybe their P&L in US dollars every month. So that's an example where they would normally use a reporting currency.
Yeah, because the reason why I'm asking is because it also depends on the size of the company. There's some of them are huge multinational organizations where they have global operation across the world.
Yeah.
And then you also have some other company, maybe kind of like a SME, mid-size
Mm-hmm.
type operation that maybe I just had a regional operation, maybe just within, say, EMEA.
Yeah.
So would it be the same design architecture that you use?
Yes. It will
What
be.
you will
Yeah.
use for the same thing. Okay.
Yeah.
Okay.
Yeah.
Okay. All right. Thank you.
Yeah, no problem. But in some cases, they may not need to have, if you don't do IFRS reporting, they may not need to have some other lectures and so on. Yeah.
Okay. Yeah. Thank you. Yeah.
Bella, I see your hand up. You can unmute. No. Okay. Can we configure POS in Fusion? POS. No, that not in Fusion, but I think there's another Oracle product that has the, I believe POS is the point of sale. I think Oracle owns another product called, I think it's Micros. So, and that's got the POS functionality with Oracle Retail. Yeah.
Can you hear me?
Yes, we can hear you now. Yeah.
Thanks. So, do we use this document in real life to drive the accounting workshops, right?
So is there a
To drive the accounting workshops, do you advise that we use this document like as a template?
yes, I mean, what I've shown you today is basically what I use for the accounting workshop.
Okay.
Yeah, using the Excel spreadsheets, taking them through each of the different areas. So if I'm doing payables, for example, I would take them through the various touch points for accounting and ask them how it's derived, and even if it's fixed assets, you know, and then I would go back into my my accounts values, try to establish the values that this would be based upon my structure, here. So it's a combination of all of this that would happen, you know. So I have a base structure that I start with. Most companies would have a structure anyway, most will have, but then you then start to map which accounts will be represented and then start to think about how is it going to be derived. So that's basically how it works.
So would this be used to create the SLE, right?
So we did, sorry, I didn't hear that.
Would you use this to create the SLE? SLE.
Oh, yes, the SLA, yes. I'll use this, yeah. Subledger accounting, yeah.
My last question, can one upload the configuration workbook, right? And use that in setting up the Oracle Financial, just like we have the rapid implementation.
Yeah, I'll talk about this tomorrow, but you would have the config workbooks. So the rapid implementation is just used to load the transactions.
Okay.
Yeah, but the config workbooks, this mainly are deliverables as well to kind of show the business what you've configured in the system. Yeah, for each of the modules. So I'll take you through this tomorrow. Yeah.
Okay. Yeah, and then can you download the config workbook or from Oracle? I don't know, or this was just given as a template already. That
this is a template. Yeah. This is a template. Yeah.
Okay. Thank you.
Yeah. Thank you.
Can you hear me?
Yeah, we can hear you.
Hi, Jimmy. Yeah.
Hi.
The subledger accounting, you know, you say that you do all the reporting from the subledger accounting.
No, some.
Does the subledger have its own GL?
No. Okay. I'm going to talk about subledger.
I'm used to, say, version 12, where you've got, or a version 11i, let's just say, where you've got the subledgers, which is like payables, AR, and then you got GL as a standalone in the
Yeah.
sense that when you close GL, then
Yeah.
it's now on to the next period or new financial year.
So what you have now is you have a layer in between those called the subledger accounting, and that's where all the account derivation is derived. And you can run reports from your subledger accounting.
Right. So if you go to GL,
Yeah.
would you?
Hello? You've muted yourself.
Oh, sorry.
Yes, sorry.
Sorry. So if you go into GL, will you see the same reports that you would see in the subledger?
No. Yes and no. Right.
Okay.
Yeah, yes and no, because I'm going to go into subledger accounting in a bit more detail later in the course, but just
Oh,
think
that's
about,
all right then.
just think about
fine.
that. Yeah, that the subledger is an area in between your subledgers,
Yeah.
and GL, where account derivation is done.
Right.
Yeah, it doesn't exist in
Okay. I'll
11.9.
ask some more tomorrow.
Exactly. It doesn't exist in 11.9, but it exists in release 12
Yeah.
and also in Fusion.
Right.
Yeah.
Just one last question. Where you said the chart of it, where you got the chart of accounts, and you're having like the segment values, and you have some spare segments, say 10 or so.
Yeah.
If you don't have enough spare, meaning you haven't really looked at it correctly, and it ends up that you are missing so that you can't expand, is there ways around that, or is the structure confined exactly to what the structure was, how the structure was built initially?
Yeah,
Meaning there's no scope to move it at all because
exactly.
you've not left enough space, sort of thing.
Yeah, you cannot expand it once you started to
Right.
translate. Yeah, it's set in stone and you cannot go back and change that. Yeah.
So you have to be correct at that point to say, this is the ranges we are going to use.
Yeah.
Okay. I
Yeah.
understand.
And that's
Thank
why
you.
we spend a bit more time in designing
Yeah.
that structure. Yeah.
Yeah. Right. I understand. Thank you.
Yeah, that's fine. Yeah. Got a question here. Is accounting data to fill this account? Is there sample data? Okay, I'm going to give you, I'm going to give you some of this sample data as well. And yes, it is accounting data that you need to fill. I believe you're talking about these accounts that you have here. Yeah. Okay. Yeah. Okay. Yeah. Yeah. So yeah, these are accounting data, and you will get samples, and you will also get the structure as well. Yeah. You get the spreadsheet anyway that you can start to use it.
One last question, Yemi, just to double check. The Slack software, or whatever it is, we're not using that no more. Is that correct?
So which one?
Slack.
No, we're not using Slack anymore. All the communication will be on the platform.
Right. When you say platform,
I'm talking about the community page. The community.
Okay.
Yeah.
Oh, okay.
Yeah.
Okay. I remember seeing something about the Slack is not going to be used or something like that.
Yeah.
Okay.
Yeah.
All right. Thank you.
That's fine. Then the other thing I was also going to mention is that if you go to the page, let's go back to just want to show you something on the, and I think some of you have seen this. I've opened up something called the jobs board, and I will be posting jobs here. Now, some agencies they come to me and they say, we need X number of people. So this is just an example of something that came through from one of the, this guy's an agent. He's looking for 6 people for Oracle remote work in Poland. Again, if you based in the UK, so saying that he told me today that he's looking for people based in the UK, then you can contact him directly. Now, if you have job leads like this, you can also post them here, and just feel free to share this. When we were using Slack in a few years ago, there were people that posted jobs on the job board, and there are people in the course who actually got roles as well. So let's share the information. We're all here to help each other. Okay. Any other questions before we close today?
Oh yeah, Yemi, I've got a question. You know, like when you're going through the workshop, in order to get the business or the company to sign up on what has been done, is there a particular document that you give to them where they can sign? Do you have a copy of that? Or
well, no,
just a letter or something, or
email is okay, as long
okay,
as,
okay,
yeah.
okay. Thanks so much.
Email is fine. Yeah. Okay. So thank you, everyone, and we'll see you tomorrow, and have a great evening.
Thank you. The same.